Good evening. The stamp duty rate cut on share sales on Bursa Malaysia has stimulated the equity market to be in the green on its first trading day. First Deputy Finance Minister Datuk Seri Ahmad Mazlan said the stamp duty has been reduced to 0.1% of contract value from 0.15% effective this month.
Kepada mereka yang terlibat dalam Bursa Malaysia tahu bahawa duty stamp itu memainkan peranan yang penting. Jadi apabila ia dimulakan bulan 7 ini, kita harap ada perkembangan yang positif di Bursa Malaysia.
He added that the stamp duty rate cut will also directly reduce the cost of securities transactions and make local equity market more competitive. At 5 p.m, Bursa Malaysia ended in the green territory, surging 19.21 points to 1,395.89. RHB Research expects Bank Negara to keep the overnight policy rate OPR unchanged at 3%, with neutral guidance at its Monetary Policy Committee MPC meeting on July 6. Previously, the firm had indicated that it anticipated a 25 basis points OPR hike. In a research note, RHB Research said the key catalysts for its change were mainly due to limited inflation risks and Bank Negara's foreign exchange intervention measures. Although the core consumer price index inflation is expected to remain sticky in the second half, the ringgit against the US dollar is expected to hit 4.75 in the near term. Hence, the central bank is expected to hold the OPR steady since inflation risks are limited and the weakness in ringgit was mainly due to external factors and not domestic in nature. On another matter, RHB Research said system loans grew in May, denoting strong demand for financing, despite a surprise 25 basis points overnight policy rate hike. It said total loan applications for the first 5 months of the year grew 8% year-on-year, a positive for future loan growth. On the sector's asset quality, the firm expects more granularity on the bank's utilization plans for their overlay stocks, which include redeployment or top-ups and/or write-backs. It also maintained an overweight call on the sector premised on the steady delivery in earnings and dividend growth, along with attractive yields and valuations. It added that if banks maintain deposit pricing discipline, a potential net interest margin recovery may be a near-term catalyst. Foreign demand for domestic bonds may be weak in the near term. According to Kenanga Investment Bank, this amid a poor risk sentiment, a weak ringgit as well as unattractive yield differentials against developed market bonds. And it said that the 10-year Malaysian government securities and US Treasury yield spread is currently negative at 2.9 basis points from the previous week of 0.6 basis points. Likewise, the research firm said Fed Chair Jerome Powell will continue to signal a hawkish stance. This following a strong US economic data, raising bets of further rate hikes in the coming months. As such, the investment bank believes foreign demand could chart a strong recovery towards the end of the third quarter of the year, after it is certain that the Fed's hiking cycle is complete. Malaysia's Manufacturing Purchasing Managers Index PMI fell slightly from 47.8 in May to 47.7 in June, indicating a 10th consecutive moderation in operating conditions that were the strongest since January. S&P Global said that inflationary pressures are showing signs of increasing, giving a third consecutive acceleration in inflation of average cost burdens. Nonetheless, muted demand conditions are weighing on the confidence of manufacturers as the overall degree of optimism dipped to a 23-month low amid concerns regarding the timing of demand recovery. The moderation was the strongest recorded since the start of the year, as firms noted muted demand and client confidence in both domestic and international markets. As such, export demand for Malaysian manufactured goods fell further and at the steepest rate for 4 months. And that's all the time we have for Bizworld this time around. I'm Raymond Goh. Thank you for investing your time with us, and make sure you stay tuned to TV3.